Hello there! Lecture Series 18 of Bite-Sized Corporate Reporting focuses on IFRS 15, Revenue from Contracts with Customers. This is a three-part lecture series. The objective of IFRS 15 is to set out the principles that an entity shall apply to report useful information to users of financial statements about 1. The nature, amount, timing and uncertainty of revenue, and 2. Cash flows arising from contracts with customers. IFRS 15 applies to all contracts with customers except the following. 1. Lease contracts within the scope of IFRS 16 leases. 2. Contracts within the scope of IFRS 17 insurance contracts. 3. Financial instruments and other contractual rights or obligations within the scope of IFRS 9. 4. Non-monetary exchanges between entities in the same line of business to facilitate sales to customers or potential customers. Example given in IFRS 15 is a contract between all companies that agree to an exchange of oil to fulfill demand from their customers in different specified locations on a timely basis. Please note, revenue presented in the statement of profit or loss is income arising in the normal course of trading or operating activities. It should not include proceeds from the sale of non-current assets or sales tax. IFRS 15 stipulates that an entity recognizes revenue by applying the following 5 steps. Step 1. Identify the contract. Step 2. Identify the separate performance obligations within the contract. Step 3. Determine the transaction price. Step 4. Allocate the transaction price to the performance obligations in the contract. And finally, Step 5. Recognize revenue when or as a performance obligation is satisfied. The second part of Lecture Series 18 on IFRS 15 Revenue from Contracts with Customers will focus on Step 1 and 2 of the 5-step process. Till my next lecture series, thank you and have a nice day.